Hello and welcome back to another episode of the Investor Financing Podcast. Today we're going to talk about mobile home park investing. A lot of us out there are always interested. We're always Googling information on mobile home park investing, and I'm sure you've probably visited mobilehomeuniversity.com like I have many times and listened to podcasts and so forth. So we have the co-founder of the university, and please welcome Frank. Frank's been a mobile home park investor since the 90s. And now he's one of the largest mobile home park investors out there. So it's a pleasure to have you on the show. Thanks for joining us.
Yeah, thanks a lot for having me.
All right. So mobile home parks to many seem intriguing. A lot of people might have misconceptions about mobile home park investing, but being a residential investor, I look at mobile home park investing as like a really interesting asset class to invest in, because really, it's really about owning the dirt, not owning the coaches, and that's the key. Some people have the strategy that they like to own the coaches, but from my understanding, you really want to own the dirt, and don't want to have to deal with the coaches. So even if you buy parks that have coaches that are owned by the park, you then will sell them off, right? That's the goal of these. So Your university is great. I've looked at it, and at some point I definitely want to go through your university because I feel like this would be a great asset class to own, and obviously you feel the same way because you own over 250 communities. So for somebody who's out there that's an investor, maybe they have a couple $100,000 to start with. They're not going to do big syndications, in the beginning at least. Mobile home parks seem to be like one of the best cash flowing assets. What do we look for in the opportunities as a newer investor getting started? What would be the recommendations?
Okay, well, first off, no one should start off even in any syndication unless you've done at least one park successfully. So that should come with time, not immediately. Mobile home parks, as you referenced, they are effectively parking lots. And that's the beauty of the business model is we don't own the homes. We don't have to worry about the maintaining of the homes. All we have to do is provide a piece of land with roads and access to utilities, hopefully professional management, nice common areas, nice entry. But it's a little different sector of real estate. Its closest relative is, in fact, the parking lot, like you have at an airport or an office building. But there are certain parts of owning a parking lot that makes the parking lot functional and successful and not. Those five things are abbreviated down to infrastructure, density, the economics, the age of the homes, and location. Those are kind of your five key drivers. When someone's entering the business, the first thing you have to know is understanding those five key drivers, what's acceptable and what is not acceptable. And if you look at the industry from the 90s, when I got in it, to where it is currently, those who have succeeded, who have aligned themselves with what the lenders want. Because we, of course, like all real estate, are at the mercy of the lending community and what they want us to be. So what we've learned over the years are that banks want us just to be that, a parking lot. They don't want us to own the homes. They don't want to have anyone that has more than 5% of the homes in common ownership. They want to have paved streets or concrete or possibly road base, parking pads or parking system, and a location that's traditionally in a better suburban area or a safe urban area. And it's not really a complicated business, but you gotta stick with what the lenders want. As you said on the front end, there are people who have been successful doing what we call detached apartments, where you consider each mobile home, or what you said, coach, as a rental unit, and they then like to own all of the units. So they are no longer a parking lot, they become what we call a detached apartment complex. The problem is lenders don't like that. So when you build that model, it's very, very illiquid.
And if lenders don't like it, that means you can't leverage unless you get seller financing. And usually seller financing, they don't want to carry the paper for 30 years like you can.
That's right.
So a lot of your parks now, do you usually place agency debt, or is it more regional banks, credit unions that you prefer?
The whole industry has been going towards Fannie Mae, Freddie Mac since it came on the scene. And so it went from 0% of mobile home park financing to over 50% in dollar value each year goes to Fannie Freddie. And we're no different. If we can get to a Fannie Freddie loan on a mobile home park, we would definitely do that. Fannie Freddie gives you the ability to refinance the park annually, so that unlike conduit debt where you're stuck in it for 10 years and you cannot access any equity, Fannie Freddie gives you the best of all worlds. The problem is Fannie Freddie loans have to be really large. So if you have a mobile home park and it's under, say, $3 million of valuation, you probably cannot get a Fannie Freddie loan. The next most preferable is a conduit, CMBS debt. It starts in deals that are probably around $1.5 million to $2 million. Underneath that, you're just seller financing and regular bank debt.
Okay, got it. Yeah, I do financing for a living, but my expertise is not mobile home parks. But
sure,
maybe once I learn to take your course, I'll get proficient in
sure.
it. Right? So, but that's so you bought your first park in the '90s. I think it was like 500K purchase price. You
Yep.
kind of dove in head first. I watched a podcast of yours. You dove in head first, and you were obviously a very successful young entrepreneur. I think you went to Stanford.
Correct.
You had a billboard company, sold that, probably made some money. So you had a little bit of money getting into the mobile home park business. You purchased your first mobile home park business, and it was a lot needed to happen for it to start performing. I think you might have gotten some seller financing on it. But there was, it was like the park that you didn't want to buy, but you quickly turned around. There was a park that closed down, I believe, and you got some good tenants in there, and basically you got it performing, exited it out like 3x, like for $1.5 million, and in just a few short years. And from there, that kind of proved the model that, like, hey, I didn't even buy the right park, and it was a kind of a home run deal. And then you dove in head first. At what point did you start transacting with your business partner? And then at what point did you start growing and then syndicating? What did that look like?
I bought my first park in Glen Haven in 1996. I just sold a billboard company. And my first deal at Glen Haven, it was $400,000 with only $10,000 down. The guy would carry for 30 years. The problem was it was losing $2,000 a month, and it was everything wrong in a park. So basically, if I dove in the pool, it didn't have any water in it, and that was a really tough learning experience, because it was again, it had all the attributes that you probably would not want. The park is in Dallas Fort Worth, so the location is excellent. The guy that I sold it to, he's done very well with it, but it has high density. It's, the location is on not the growth part of town, but it had master metered utilities, and I suffered through the master metered gas and had to convert it to propane, and I suffered through the master metered power crisis and got that resolved. But that was a really troubled property. So it's kind of like Berkshire Hathaway's, Warren Buffett's first thing was a catastrophe, but he learned from it. That's kind of how that park was. It ultimately proved to be profitable because I'd bought it so cheaply and had done a semi-successful job of turning it around. But that was not the model I wanted to be in. I wanted something that was basically a notch up from that.
And then from there, how did you get the momentum
So
going?
from there, what happened was I bought park number 2, which was, I think it was like 65,000 with 5,000 down. You see the progression of all my early deals were seller financing. So I just kept doing my doings, buying up basically small turnaround parks, low prices, seller financing. But we didn't start doing Reg D 506 syndications until 2010. And I didn't actually start buying in tandem with Dave until 2010. So Dave and I initially were competitors for a really long period of time.
Do you always need on-site management, or is it have you gotten it down where you don't really need on-site management anymore?
Well, you have to have an on-site person to tell you what's going on. So when you say on-site management, let's look at the facts. I mean, 92% of all of our collections are online. So I don't need the manager to basically pick up money. We do HD videos of the properties. We recommend people do it monthly. We do it quarterly just because of our size, which gives us a very good indication of how the property is looking. So there's a lot the owner can do today using technology to manage from afar, but you still have to have that human being on site to tell you things like if the power went out, or just those basic items. Our industry, self-storage just tried to start managing properties using like iPads on wheels and things like that. We can't do that. Our properties are too spread out. There's no way you could get the little iPad down the road without someone stealing it or hitting it with a car or something. So I don't think you'll ever get around humans, but we have taken most of the reliance on humans out of the game and move that more to a centralized formation using technology to manage that centralized actions.
Hi, if you'd like to book a call with me and discuss SBA financing, whether it's a 7A or 504, or you just don't know where to start, maybe it's a startup business, you're buying an existing business, you're buying a franchise, you're building a new office building, you want to expand your existing business, we have multiple solutions. I can walk you through the 7A and the 504 and the SBA loan process. And if you have any other questions on any other types of financing, I'm happy to book a call with you. The link's below. Look forward to seeing you soon. Can you kind of walk us through like your boot camp? Just like what's the learning process for what you teach and the steps? And then following up on that is, if you were to start today, would you do a similar process, look for seller finance deals and so forth?
Sure. Yeah. Well, first off, the way the boot camp came to be, Dave and I used to write little tiny books, and we would sell them on his website, Mobile Home Park Store. Mine were typically humor oriented. Dave's were typically math and accounting oriented. People really liked the little books. They were very different. So we just kept writing more little books, and then we would join them together. And so it kind of organically grew into the boot camp. And the boot camp is like a college class. So if people are thinking it's going to be your typical real estate event with, me doing cartwheels and promoting crap, we don't do any of that stuff. It's basically 30 hours of me lecturing with PowerPoint throughout, and then we have live Q&A throughout. And we go over every part of the process, from how to find the park to negotiate it, the contract, buying it, doing due diligence on it, the financing part, and then a whole lot of the operations of it. And because it's like a college class, it draws a diverse audience. We have not only people buying parks, we have a lot of people who already own parks who are just trying to do a better job of managing them. Then we have a whole lot of lenders, brokers, appraisers, New York Times, National Geographic. We've had just about everybody through it over time, because it just gives you a fair scientific analysis of the industry. We don't really promote the industry. In fact, we tell people that if you attend and you decide you hate the industry, then we again accomplish what we were set out to do, which is tell you the truth. So it's kind of an odd creation. As far as your question on would I buy the same parks today or do the same route I did? Yeah, for most people, Dave did the same. Seller financing, it takes a lot of the stress out of buying a mobile home park, because you don't have to do the whole banking thing, and you typically end up with an asset that you have that you own using non-recourse debt, often with a lower down payment, typically with better terms. The biggest problem with mom and pop debt, which you already identified, is when you're 80 years old, you typically don't want to carry for 30 years, right? So normally they're going to want to have a balloon, which we try and have the balloon at least 5 years into the future. And even then we try and buy an option if we can, if we need it, to go to 7 years. That gives us typically about 4 years to turn the park around and a little while to season it, to refinance it. But that's the only problem. In other words, Fannie Mae, Freddie Mac, and conduit debt is all at least 10 years in length. 10 years is far better than 5. But, that's how many deals get structured, is they seller finance on the front end and they go in and refinance.
How are your students? Are your students doing a lot of networking with brokers and then also off-market or direct-to-seller type of advertising?
Yeah, there's basically 4 ways to find parks. Well, one is online. There's typically, in any given moment, about 1,000 parks for sale on Mobile Home Park Store or LoopNet. The problem with most of those parks are they're horribly overpriced. So to buy those, you have to be the person who convinces mom and pop to drop the price. Sometimes it's because they bond with you, and sometimes it's just because it's been on the market for a while and they get tired of it. They just dump the price. Then you have cold calling and direct mail, the same thing that people have been using on single family or anything for that matter. And then the last are brokers. And for us, our portfolio over half came from brokers. So brokers have been our number one. But then there's many other people who've never bought a park from a broker. But those are your four basic methods.
So with your portfolio being so large, are you starting to get like institutional investors kind of knocking on your door to buy your portfolio at this point? Like,
yeah, so we've had institutional investors knocking on the door for many, many years. We sold 102 properties to an institutional investor in 2018. So we have done one large private equity sale. So, pretty familiar with the process. In the mobile home park industry, because it's so fragmented, private equity groups, they don't have that many people they can call on who have any large congregation of parks. That's part of the deal. So there's probably, for private equity groups, there would not be probably greater than 40 people total in their entire universe that they could buy at the minimum they require as far as how much capital that they deploy at one time.
Very interesting. So there's always an exit, even if you grow this. So during a period like now, with the craziness with the war and COVID and inflation, it seems to be that we're having a really, really hard time with affordable housing. So,
correct.
Outside looking in, it would seem that mobile home parks are going to continue to appreciate at a much faster rate now than ever before.
Yep. Well, the big thing with mobile home parks is always been the fact that our rents were not set by professionals, but by moms and pops. They represent 90% of all mobile home parks, and they're terrible about setting their rents. So if you look at the rents historically, if you map them out, they often go entire decades without increasing them. And that's why the US average is around $300 a month. But if you inflation adjust for when the parks were built, it would be closer to about $500 to $550. So you can buy a mobile home park today and typically expect to raise the rent probably $200 to $300 a month over a period of years. And that's pretty significant when you look at the beginning. I mean, I know apartments can often go up $300 or $400 a month in 1 year, but they're starting life out at $1,600 or $1,400 a month, where we're talking about the ability to basically double rents in most parks over a span of maybe 5 years.
Wow, and so some states the lot rents are just super low. So those are the states you probably don't want to purchase in.
No, well, let's go over the states that are super low. The Southeast is where you find all the low rents. It's the only states that have it. Mississippi has the lowest of all the states. They're typically in there at about $95 a month. Mississippi has only, I think, 3 100,000 or greater metro areas, which is what the lenders like to see. So getting a loan in Mississippi would be extremely difficult. So that state is just all around hard. And Louisiana is also the same, because since they have Napoleonic law, which is crazy that they don't follow the law that the rest of America does, most of your lenders won't go there. So once again, you got no debt. But you can't lump in, for example, Alabama and Georgia, because Alabama and Georgia have done really well developing those states economically. But you can still find lower rents in those states because, again, there's not been a lot of institutional action. Most institutional buyers have avoided Alabama and Georgia and lumped those into Mississippi and Louisiana, because there was a while in which Alabama was just as screwed up as they were. But then Alabama, as you know, became like the champions of car manufacturing, and they suddenly are started attracting all this new industry. So their actual stats on single family prices and apartments and housing vacancy, those are actually superior to some other states. So, if someone asked me, where would you go to find the biggest price differential between current rents and where you could go, it'd be somewhere like Alabama or some parts of Georgia.
Okay, that's good. That's good feedback right there. Yeah, Alabama seems to be doing really well in certain markets there for sure.
Yep.
So I know Facebook's going into Huntsville with the data distribution center. So a lot of good things happening there. So you're just following trends really, and you address all this obviously in the boot camp. So if somebody wants to dive deep on this,
sure.
So really, somebody getting started with limited capital is going to take a course, learn the fundamentals, and they're going to look for a market. They're going to then do direct to seller marketing, try to find seller finance deals where they can possibly come in with $100,000 or less with the seller financing. What about like a lot of the parks aren't on public utilities and things like that? I mean, I know that's a red flag for certain lenders. But if you're buying a smaller park, I mean, what's your thought process on septic and not having maybe
Sure.
having a well,
Yeah,
stay
well,
away? Yeah.
yeah. The deal is, actually most parks are on city water, city sewer. That's the norm in our portfolio. 90 something percent of them are. The where you start seeing a lot more of rural well water and septic predominantly is in those areas that have too rocky a terrain, or they were too poor to build a lot of water and sewer lines around. And if you're going to be in those areas, and those are sometimes even entire states, like in Pennsylvania, because of all the mountains, it's really hard to get a sewer line that drains down through gravity anywhere, right? So you can have like a really big mobile home park that's got a packaging plant or something for sewer because they can't get a sewer line to it. But when you're buying a small park, a big park, it can handle things like that, right? So if you have a big park and you got a well, and a well costs 50 grand to rework if it fails, and you're going to spread that out over 100 lots, well, it isn't too bad. But if you have to spread it out over 20 lots, it's terrible. So we try and stay away from private utilities on the smaller parks. The smaller parks have some nice attributes for many buyers, allows them to get in without vetting the farm, and they can learn from them, and they have some constructive uses, but they don't do well when you stick private utilities into it, because now you're mixing something that's very toxic, very expensive, ruins the whole passive model of owning a park when you're all the time having to worry about how's the sewage get processed, or will I have potable water tomorrow? So yeah, we recommend people try and stay away from that. If you got to do it, just have one. Like, have city sewer and well, or have city water and septic. And a lot of lenders can survive the deal if you have just one of the two. But where it gets really much worse is when you have 2 for 2, because now you've got 2 turnoffs in one deal.
A lot of cities started kind of like regulating mobile home parks, right? And so like, developers would come in and they would convert these mobile home parks to other asset, maybe a multi-family property. But do you see that trend reversing now with people, with the cost of living being so high? Are cities going to be more open to, designating? I mean, because I don't think, is there anybody that are doing like new mobile home parks right now where they're carving up dirt?
No, cities didn't regulate them, they banned them. So basically, there haven't been any mobile home parks built in any meaningful number since the 70s. And they did that for every reasonable reason. The parks are huge money losers for cities. Typical park, property tax on the park, both land and home, maybe $500 a year cost to the city of that home. They probably got 2 kids in there, probably $16,000 in tuition, don't have health insurance. So they go to the hospital, they can't pay that. City probably loses 10, 20 grand per lot per year. And it's the only thing in a city that loses money like that. Nothing else loses money like that. So they don't want them. And then if you look at Zillow or any website showing home values, if you look at the homes around a mobile home park, they are half of what they are a block away, because people hate mobile home parks. They don't like them as neighbors. So of course, cities reflect the population of the people who live there, and the people who live there hate them, and then the cities hate them. And that's just been true for about a half a century now. And you won't ever see that go backwards, because I know we all talk about affordable housing in a macro sense, but on a micro sense, cities don't want parks, and you can't make them do it. And you'd have to get rezoning to build them, and they won't give you the zoning. And if you even if they wanted to give you the zoning, the whole town would show up in opposition and they wouldn't do it. So what you're actually seeing is you're still seeing an acceleration of parks being redeveloped. That's the big deal, because a lot of these parks are just the right size for other development. Your typical park comes in a piece of land that is 5 to 10 acres in size. And at 5 to 10 acres in size, you are a perfect pad for Lowe's, Home Depot, apartment complex. And a lot of times when guys want to develop something, if they want to build it out on land, they have to go buy a giant piece of land and subdivide it and all this stuff. We are plug and play ready to go. We're already fully subdivided with all utility tract of land sitting there waiting to be redeveloped. And so that's been the number one issue with the industry has been, cities will give you any zoning you want to get rid of the park because they hate the park. So I could walk in and develop anything I want in a mobile home park space. And I guarantee the neighbors would all be in favor of it, unless it was a lead smelter or something like that. Any other use, sure, the neighbors would rather have that use. That'll make their home prices go up. So that's the problem. I think the future of affordable housing, to be honest with you, is not going to be found in mobile home parks. It's going to be found in relaxing the standards on modular housing. That's the piece that people need to be pushing for politically, but they haven't figured that out yet for some bizarre reason. But you look at all these home kits you can buy on, Amazon. They're super cool, mid-century modern looking things. They can build bigger ones. They can build bigger kits like that might deliver a house, a cool looking mid-century modern house for $100,000 that you can put on a residential lot. The problem is you can't put them on a residential lot right now. So that's, you want to solve the affordable housing crisis? Absolutely. Just let people build tiny homes and modular things anywhere they want, and you'd fill up every vacant lot in most cities. But they're holding that back. And that's what, most mobile home manufacturers also own modular home factories. And that's what they were pushing the entire time that Trump was in office. They were pushing a product called CrossMod, which was modular, because that's the obvious thing. And it's really odd to me that no one has figured that out or is promoting that.
That is odd to me. I've been studying a little bit about modular construction, and actually yesterday I got a call from a gentleman, and he's an engineer, and he does all modular builds now. He has found a company, and once the modular home is built, it's going to appraise like a stick built then.
That's correct. The only reason you can't put a modular to city limits is it doesn't comply to the Uniform Building Code. So you have to go out in the county. And the cities won't relax the Uniform Building Code because everyone is tied into the single family industry, right? They have friends, relatives, everyone who's a framer or a plumber or doing something. I mean, home building is one of our nation's biggest industries by far. And so it's almost like the mafia. So you have this giant underworld politically of a giant industry that does not want modular, but that would be the solution. In other words, if people could buy, I'm sure you've seen those cool kits they sell on Amazon, right? They look so cool. They're like $50,000 that you can put in your yard. Can't be your primary dwelling, but maybe it'd be like your pool building or something. If you made those into the adaptation to a regular housing unit, those would sell like crazy. They sell like crazy now. I mean, Amazon can hardly keep those in stock.
I have clients that are buying, like in California, where the ADU rule. So I had a client, I actually didn't do the loan for him on this one, but he bought an 8-unit multifamily existing property, and then in that county in Santa Cruz, California, they allow for ADUs. So he's adding 4 ADUs. He was doing prefabbed ADUs. So you're starting to see it a little bit more. But I see that like that's the only way. You're absolutely correct. If you're not going to let mobile home parks, you're getting rid of them, then I'm seeing people do shed conversions where they're converting these shed kits into really cool houses.
Yep.
And they look great.
Yep.
I was just looking at trying to do one out. I live in Las Vegas, but out in Pahrump, it's a smaller city. I was like, I'd love to just build one and see what it would be. Go through the process of it, and then keep it as a rental, or maybe use it as an Airbnb or something. But
yeah, I mean, it's kind of like IKEA changed furniture, where you can buy it in a box and assemble it at home, and it costs a fraction of buying pre-assembled furniture because it's so much more efficient. That's the same how modular would be, and that I mean, you cannot deliver a stick-built home today at a reasonable price. It's mathematically impossible. I've been to conferences where they've had people talk and actually show the numbers proving it's impossible. But you can, using modular, just as IKEA can produce a modular furniture product, but it never gets any PR. I mean, no one ever talks about it, promotes it, but clearly that's when it comes down to truly fixing affordable housing, that is the way you fix it.
Have you ever thought about doing any communities, since you seem pretty passionate about it and probably have the means to do it? Or
Well,
is
the problem you have is that, and again, we're in the parking lot business.
yeah,
We don't want to be in the home business,
yeah, it's too
and
much
we want to be
work.
aligned with lending. And I don't even know how lenders would treat that kind of stuff, to be
Yeah,
honest with you.
that's the also problem too. When I was talking to the gentleman yesterday, I said the problem is that they're building this off site, and the lenders will fund it when it comes on site, but they're not going to give you. These modular builders need 10% deposit, then they need 50% at 50% completion, and so the lenders can't. They don't understand the lending component, so that's a big problem. You're right, and what you said in the beginning, you're so accurate about. You align yourself with the lending. Where can I get the best, highest leverage, the cheapest cost of capital? And then you started buying around that type of structure, and you're able to just take off. So then in 2012, that's when you really started syndicating, and you just grew
Oh,
10x.
2010 is when we started. That's when we launched our first Reg D fund. And then we would buy up the parks in that fund, and then look and see if we thought there were still parks to buy. We would say yes. We would open another fund.
So what's your plans now? It seems like you've been extremely successful. You enjoy what you do. Where do you see your business going over the next 10 years or so?
Well, we don't really want to be a lot larger. We'll probably shrink more in size. I mean, as people give us offers to parks, we've always been a very fluid seller. We've sold a lot of parks over the years. So if we had another private equity group to come to us and want to buy another 50 parks, 100 parks, we probably sell it off. We keep buying. We've really never been obsessed with our size. We've ranked as high as fifth largest, but it doesn't really matter that you don't get anything special being in the top 10 or top 20. So, we just every day, if we see something we think is a good deal, we buy it. If we think we get a good offer, we sell it. So, we don't really have a master plan beyond that, to be honest with you. Really did have never really had a goal like, hey, let's try and be the biggest or the whateverest. We just do what we do, and that's about it.
And what do you attribute your success to? Just your upbringing, or where did you get the, like, kind of seemed like right out of college you started your own business and were pretty successful. Where did you get the skill sets to accomplish what you have so far?
Yeah, I mean, well, first off, I don't rank the business as being what's successful to me. So maybe that's part of it. It takes some of the stress off. I've always been way more preoccupied with being a parent, being a spouse, and so. But at the same time, I like to work. I'm a workaholic, so I work all the time. So I probably outwork people. That's probably why the billboard business worked. Is other people had normal lives. If they work 8 hours, I work 16 or 24. So I just like to work. I don't really have any hobbies other than doing things with my wife and daughter. That's about it. So the billboard thing, I think it outworked people. Mobile home park thing, I think I outsmarted people, because when I got in the business, no one would touch the stuff, right? So I was in there during the era of the 90s when mobile home parks were considered absolutely toxic. Lenders wouldn't even talk to you. Deals would die all the time for lack of finance. And they just pretty much rode the industry as it's matured. So I think the mobile home park thing's been more of a timing thing.
Oh yeah, you timed it pretty well, and now it seems to be on people's mind a lot more than it was before. I think social media has been a big impact for real estate investment in general.
Yep.
I would say, what would be one negative about mobile home park investing is the fact that you can't depreciate like you can a multifamily property.
I don't know. I mean, that the depreciation in mobile home parks allow you to shelter your principal. So your principal pay down on your mortgage. So you don't have phantom income. So I don't think the depreciation is really that bad, to be honest with you. Probably the biggest problem with mobile home parks is you're constantly mistreated by everyone. We get mistreated by city officials. We get mistreated in the early days by lenders. You get mistreated by the media. So it's just very unfair. I mean, at any given day, if you Google up articles on the industry, it's always bashing a park owner for being evil or whatever. It's just absolutely constant. And you don't get that in other forms of real estate, right? So if I were to buy, recently I was in, I think, Des Moines, Iowa, and someone was taking a block of downtown, and they shut everything down, kicked everyone out, and now they're going to make it into a cool, edgy, neato thing. And of course, that person is being heralded in the papers as a great person and a genius. In the park business, if I did the same thing, I'd be all over the media as the guy that ruined everyone's dreams and lives, and you name it. So it's kind of a very negative business. You have to have a very, very thick skin to be a successful park owner, because you get constant criticism from pretty much everybody.
My friend always says, Beau, he goes, thick skin, fat wallet. That's what
That may well be true. That may well be true.
Yeah, no, and the more I think about what you were just saying is the world's so hypocritical, right? Like everybody's talking about affordable housing, this and that, and then like here's people that are trying to do it the right way and deliver nice, clean parks and getting bashed. So yeah, I get that. I mean, I could only imagine, having as many parks as that, and like you're kind of the bad guy in the group, but. Obviously you have a thick skin and you give back a lot because you've probably trained how many thousands of people have gone through your courses.
Yeah, not as many as you would think, because again, mobile home parks are a strange animal and it does not appeal to everyone. So, our classes have always been relatively small compared to typical real estate classes. And that's fine with us, because that's kind of representative of how many people have an interest in trailer parks, which is not a big part of the American culture.
Yeah, I see Brandon Turner buying a lot of mobile home parks now, bigger pockets. Yeah,
he went to my boot camp.
Yeah, I know him. Yeah, he's been doing very well, and he seems to be buying the park every. So yeah. So well, anyways, Frank, this has been really great. Thanks for sharing so much about the industry. Sure. I got a lot out of it. Yeah, I'd love to at some point take your course. And I mean, for me, I have thick skin. At the end of the day, I look at it like it's a good cash flow business, and makes a lot of sense. And it probably has its challenges, but I think you'd probably have less to deal with than maybe owning a lot of multifamily apartments. It seems.
I would agree.
Fair assessment. Anyways, thanks so much, Frank. And thanks everybody for watching the show. This was a great one. Love talking about new asset classes that we don't talk about daily. So anyways, we'll see you on the next episode. Thanks so much.